Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Now, today we welcome Jeffrey Halley, Senior Market Analyst, Asia Pacific at Oanda, as our guest today. Now, good afternoon, Jeff.
Yeah, good afternoon from Singapore at last after 2.5 years.
So, how's it like being back after being in Indonesia and for the last 2.5 years?
It's an unusual feeling, to be honest, and but I'm quite enjoying it. I also enjoyed the ruthless efficiency of Changi Airport.
Now, Jeff, before we get your insights, let's take a look at how markets in the region are performing. We start of course, with crypto market. Bitcoin is at 30,390.7. It's up 0.13%. Ethereum is at 2,079.01. It's up 0.32%. Now, looking across to regional stock markets, we start close to you with the SGX. That's at 3,203.64. It's up 0.39%. Now, looking across to Bursa Malaysia, it's at 1,550.94. It's up 0.42%. Shanghai is at 3,084.95. It's up 0.36%. ASX All Ordinaries is at 7,349.4. It's up 0.32%. The Nikkei is at 26,652.5. It's up 0.4%. The Hang Seng is at 20,473. It's up 2.62%. And rounding up the numbers, we've got the Kospi, which is at 2,615.97. It's up 0.75%. Now, Jeff, besides the Hang Seng, which is up fairly sharply, the rest are in positive territory. Tell us why.
Yeah, I when you look at other markets that are very biased towards the Nasdaq, Japan's doing quite well today, but South Korea's Kospi and Taipei are also up around 1% as well. We've seen quite a strong rally in US futures today. Now, US markets fell overnight, mostly, particularly the Nasdaq, but we've seen quite a good bounce today, and I believe it's more of a relief rally, and it's being driven by a third day now where there's been no COVID-19 cases recorded in Shanghai outside of quarantine facilities. Markets today, on a quiet day, are starting to price in peak lockdown in Shanghai. That means perhaps a relief to the global supply chain crunch, perhaps a renewal of domestic consumption in China, and that's as good a reason to be buying equities today as any.
So, Jeff, give us some highlights of your commentary today, and what are you watching out for?
Well, I actually am highlighting today that I'm starting to see a potential now for some decent corrections to some of the moves that we've seen of late. Most especially, we've also seen the rally in the US dollar. Now, we're starting to hear more recessionary talk in the United States, more noise around hard landings. And we've already heard that from places such as the Bank of England as well. And they've been quite open about waving the white flag on inflation there. So I'm starting to see more potential now for a correction lower in the US dollar, which will relieve some very overbought technical factors. We're also seeing investors starting to pile back into US bonds because of the same reason, and that's pushing US yields lower. Now, do I think this whole run higher in US yields and the US dollar are over? No, I don't, but certainly a couple of weeks of counter trend movements would be a welcome technical development. Is this conducive to buying equities? I'm not quite so sure, because if stagflation is not good for them, then neither is the thought of a recession as well. So I believe that equity markets will remain challenged.
And looking ahead, what are key things and data as well as events that we should be watching out for, particularly this week, that will move markets?
We probably want to watch the news tickers for news about COVID-19 cases in China, because I think just another couple of cases there appearing tomorrow will probably undo quite a lot of the good work we've seen today in Asia because of the lack of those headlines. We've got US retail sales this evening, along with industrial production and manufacturing. Now, if those numbers come out weaker, that recession noise will probably increase. We're going to see a weaker dollar, although I'm not quite sure equity markets will get much relief from it. I think for Asia this week, the highlights are going to be the Philippine Central Bank, whether it joins Malaysia and India and starting to hike rates, along with Singapore, which we saw back in April. And of course, on Friday, we get China's loan prime rate, the 1 and 5 year loan prime rate decisions. Now, this will be yet another opportunity for China to demonstrate its stimulus credentials by trimming the 1 year loan prime rate. They've disappointed markets up until now, but if they actually do finally decide to do that on Friday, that could be a short-term boost for mainland equities as well.
Jeff, as always, thank you very much for your insights, and thank you very much for coming on the show.
Always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at Oanda, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks a lot for tuning in.